Breaking news out of Washington, but let's slow this down and separate what's real from what's going viral. You may have seen posts claiming there's a little-known form inside Social Security that can add $800 a month to almost anyone's check in just a few minutes. That kind of promise spreads fast because it hits a nerve. People are tired of stretching fixed income dollars to cover groceries, rent, and prescriptions. But here's the truth you deserve to hear clearly. There is no magic form that automatically guarantees an extra $800 a month for most retirees, and anyone who tells you it's verified by insiders and works for everyone is either misinformed or trying to hook you. What is real is this. The Social Security system has formal, legitimate ways to correct mistakes, update missing earnings, and, in certain situations, recompute your benefit amount. For some people, that can mean a meaningful increase and sometimes even back pay. For others, it won't change a thing. The key is understanding what actually triggers a lawful review and how to request it the right way without falling for hype. Here's what's really happening behind the scenes and why so many people feel like they're being shorted. Your monthly retirement benefit is based on your lifetime earnings record and the formulas that use wage indexing to put earlier years of earnings into today's terms. Social Security gets most wage information from employers and tax reporting, and the agency uses that record to compute your primary insurance amount, which is the foundation of your monthly check. If your record is missing wages, has wages posted under the wrong name or Social Security number, reflects a reporting error by an employer, or has gaps that don't match what you actually earned, your benefit can come out lower than it should. That's not a rumor. It's the kind of error Social Security itself tells people to watch for, and it's why checking your earnings history matters. Wage indexing itself isn't secret either, and it's a standard part of how benefits are calculated. The part that gets misunderstood online is the idea that indexing errors are widespread and automatically worth hundreds per month. Most of the time, the bigger issue is simple: missing or incorrect earnings, not a hidden new table. So what is that 3-minute form people keep talking about? There is an official document called the Statement of Claimant, sometimes referred to as Form SSA 795. It's essentially a way to provide a signed written statement for your Social Security file. It can be used in many different situations when the agency needs your statement on the record, but it is not a special bonus form, and it is not a guaranteed benefit increase request. Another form that actually is designed for earnings problems is the Request for Correction of Earnings Record, known as Form SSA 7008. That one is specifically built for situations where you examined your earnings record and believe it's wrong, and you're providing details and evidence so the agency can investigate and correct it. If a correction changes the earnings history used to compute your benefit, then yes, your benefit can increase. But the increase depends on the facts of your work history, what's missing, and whether those corrected years affect the formula in a meaningful way. That's the honest reality. Sometimes it's a small bump, sometimes it's significant, and sometimes it's nothing. Now let's talk about who should pay the closest attention, because this is where you can save people a lot of stress. If you worked under different names at different times, switched jobs frequently, did seasonal work, had multiple part-time employers in the same year, worked for an employer that went out of business, or had any period where you remember earning income, but your Social Security earnings history shows a suspicious dip or gap, you're in the group that should double check. The same goes for anyone who sees zeros where they know they were working, or anyone who had a name change and isn't sure every employer updated payroll records correctly. And if you claimed benefits and later discovered missing earnings that should have been counted, it's absolutely worth addressing, because the only way to fix an incorrect record is to put the discrepancy in front of the agency with documentation. Social Security encourages people to review their earnings history through a personal online account and to gather proof like W-2 forms, tax returns, pay stubs, or other wage records when something looks wrong. If you can't find documents, even writing down employer names, locations, dates, and approximate earnings can help start the investigation. But stronger proof usually moves faster. Let's also clear up the biggest misunderstanding that gets people emotionally whipped up. You'll hear claims like, the agency won't automatically fix it unless you ask. In some situations, that's partly true and partly misleading. Social Security does run routine processes. and there are automatic checks built into the system, but the agency can't correct what it doesn't know is wrong, and it often needs your evidence to reconcile employer reporting issues. On top of that, there are legal rules about recomputations and effective dates, and not every change leads to an immediate bump. For example, the rules around recomputing benefits often focus on adding earnings that were not included in the original computation, and the timing of when a higher amount can begin is limited by regulation. So the act now before a secret window closes framing is usually clickbait. A smarter way to think of it is, if your earnings record is wrong, the sooner you correct it, the sooner your file reflects reality, and the sooner any rightful adjustment can happen under the rules. Here's the practical step-by-step path you can follow from home, calmly, without a lawyer, and without panic. First, sign into your personal Social Security account and look at your earnings history year by year. Don't just look at the benefit estimate. Look at the actual posted earnings. Second, compare any year that looks off with your own records, like old tax returns, W-2 forms, or pay stubs. Third, if you spot a real discrepancy, gather proof for the years that are missing or wrong. Fourth, submit a request for correction of earnings record using Form SSA 7008 and attach copies of your evidence. Be clear, be organized, and list the employer information as completely as you can. If you're already receiving benefits and the correction would change your benefit computation, ask Social Security to review whether your benefit amount should be adjusted based on the corrected earnings. If your issue is not just missing earnings but a disagreement with a formal decision you received in a notice, there is also an appeals process, and a request for reconsideration may be the correct route. The right form depends on what you are challenging, the earnings record, the decision, or both. Now, what about back pay? This is where people either get hopeful or get burned by bad claims. If Social Security corrects earnings that should have been counted, and those earnings change what you should have been paid, back pay can be possible in some cases. But it is not automatic in the way the viral posts imply, and it isn't a guaranteed multi-thousand-dollar deposit for everyone who files a form. The agency will issue a written notice explaining what they changed, whether your monthly amount changes, and what they owe you, if anything. If you ever see someone promising that every approved case gets between $3,000 and $6,000, or everyone gets a lump sum, treat that as a red flag. Real cases vary widely. The only honest way to talk about it is like this. Correcting a real error can raise your monthly benefit and may result in payment of amounts you should have received, depending on timing and the specifics of the correction. That's it. No guaranteed range, no universal amount, no magic. Let's also talk about the $800 a month number, because it's emotionally powerful, and it's why so many people share these claims with parents and neighbors. Could someone's benefit increase by something like that? Yes, it's possible in a narrow set of situations, especially if large earnings were missing during high earning years, and the correction changes the average used in the benefit formula. But for most people, the increase from a correction will be smaller, and in some cases it will be zero because the missing year wasn't one of the years that matters most in the computation, or the earnings were above the taxable maximum already, or the person's record is already accurate. The point isn't to talk you out of checking. The point is to keep your expectations realistic so you don't get discouraged or feel tricked. The win here is accuracy. If you earned it and it was reported correctly, you want it reflected correctly. If it's already right, you can relax knowing you're not missing something secret. Here's what I want you to do before you fill out any paperwork. Protect yourself from scams. Social Security does not charge you to file a correction request. You do not need to pay a processing fee to a third party. You should not give your Social Security number, bank login, or personal account credentials to someone who contacted you out of nowhere, promising an increase. If you get a phone call, text, or email claiming they can unlock a hidden adjustment if you act today, that's the opposite of how the real process works. The legitimate approach is boring, documented, and paperwork heavy. You review your record, gather proof, submit the correct form, and wait for a written response. Boring is good, boring is safe, and it's how you avoid losing money while trying to gain it. If you're listening right now and you're thinking, this sounds like a lot, here's the encouraging part. The work is mostly in the first pass review. Once you've checked your earnings history and found either a clean record or a problem year, the next steps become straightforward. If everything looks correct, you've just bought yourself peace of mind. If something looks wrong, you've identified a specific target, and you can build a simple packet: a short cover note, the correction form, and copies of your proof. And if you don't have proof for an older year, you can still document what you remember and contact Social Security for guidance on what alternatives may be acceptable. The agency itself recommends reaching out if you discover missing earnings and says the process can take time because they may need to contact employers or ask you to do so. That's normal. It's not a denial. It's just the system doing verification. Finally, I want to bring this back to what matters most: stability. When you live on a fixed income, even a small change in your monthly check can mean less stress at the grocery store, fewer hard choices at the pharmacy, and a little more breathing room when a bill shows up unexpectedly. You don't need viral promises to get there. You need accuracy, patience, and the confidence to ask for a correction when something is wrong. If you take one action this week, let it be this: sign in, review your earnings record, and make sure the story your file tells matches the life you actually worked. If it doesn't, you now know the legitimate path to fix it, without gimmicks, without fear, and without falling for someone else's made-up shortcut.